Hi, this is Joe Rabil with Invest Like a Pro. Wanted to do something a little different this time. Most of the videos that I've been doing have been related more towards showing how to use multiple time frames to both improve your timing and reduce your risk. I think that's a very important part of using multiple time frames. The other side of it is stock selection. And I think if you get better at picking the right stocks to trade and to invest in, your chances of success are going to skyrocket, whether your timing is good or not. You want to have good timing. Obviously, you don't want to buy something and then have it drop against you right away because you don't know the right time to enter. And a lot of the videos I'm doing are focused on that. But if we can spend a little time focusing on and maybe showing you criteria to look for that can really help you pick the right small circle of stocks to at least be your starting point. If there's thousands and thousands of stocks out there to choose from, if we can narrow the field down to, say, a select few of, say, 5 stocks, 10 stocks, something like that, that are really meeting some very strict criteria, again, I think your chances of success are going to go way up. So in future videos, I am going to spend more time explaining on how to screen and look for this type of thing from a screening capability. And down the road, my website, Invest Like a Pro, in addition to that, we are going to have some availability of an app that'll help you with, a low-cost way to be able to find screen stocks and look for names. But first thing I just want to explain is, again, I'm using multiple time frames, and I've got Microsoft up here. On the left side is a monthly chart, and on the right side is a weekly chart. This is actually this chart on the right, this weekly chart, is the exact chart I used for my book, Invest Like a Pro. It's in the conclusion. I thought it was important to use a stock like this as my example to end the book. And there's a reason for that. I didn't go into all the details why. It was meeting the criteria for the 2 time frame counter trend, lower time frame counter trend to the higher time frame, and gave a really nice signal. But I'm going to bring up a few more things here as to the reason why. And then I'm going to give you several examples of what's going on here recently, actually in the same area, in the software area, where we've noticed a lot of the same pattern develop. So let's get right into it real quickly. On the left side, again, it's always starting with the higher time frame. And if you notice, I've drawn the arrows in both on the right where price is pulling back to the 18-month line in Microsoft back in 2019, and also where the ADX is situated. The most important thing to look for in terms from a starting standpoint, if you're looking at 2 time frames, this can be done in any 2 time frames you want to do. I'm doing it from a longer term perspective because I want you to understand that you don't have to necessarily be a short-term trader to make a lot of money. There are ways to do this and use technical analysis from a longer term standpoint that can be very, very powerful. So if I look at this pullback on the monthly chart, it's pulling back to the 18. And if you notice, the ADX line reached a peak of around 75, something like that up in here. That's a very, very big reading. What I've said in the past is anything over 25 means that you've got a pretty strong trend in place. Once you get over 50, you're in a really powerful trend. And anything up at like 75, you're almost sort of thinking it's probably too far along, or maybe too strong, and that it needs to pull back some. In a case like this, it actually did pull back. But if you notice, when it got back to the 18-month line, the ADX was still up in the 50s. It was like right around the mid 50s at that point. If you go through a full-fledged pullback to the 18 MA on whatever time frame you're on, and the ADX line can only drop down and it holds 25. Anything above 25 is still a very strong trend, especially if the peak was over 50. So I'm looking for peaks over 50 and then troughs over 25. And if you can find that pattern on the higher time frame, you're going to want to go down to the lower time frame and look for, what I would consider to be a very specific pattern. I actually have a video on it. It's a MACD 0 line reversal. And, I'm just pointing out, I've drawn in a trend line here, same one I had in the book. What I don't go into detail on in the book is just basically saying, look, I've got a pattern where I've gone through a correction on the lower time frame, in this case, the weekly chart. I know I'm in a powerful, powerful trend on the monthly based on the readings of the ADX, as I already described. If the MACD line comes down to the zero and holds and starts to cup around, and it doesn't really penetrate the zero line by any significant degree, I am inclined to want to draw a trend line in place. And when you break the trend line, I want to get long. If you wanted to be more aggressive, you could go down to a daily chart and look for a 1, 2, 3 change in trend. And you might be able to get this stock closer to 100 potentially, or probably more likely somewhere around 105 before it breaks the downtrend line. But if I'm just using 2 time frames, it becomes very clear. If I've got a power trend or a very, very powerful trend on the higher time frame, I go down to the lower time frame. If I find a zero line to reversal and I see a trend line break, I'm going to be very, very interested. So I'm going to pull up a few more examples of this. So this is ServiceNow, NOW is a symbol. Notice how the ADX line here holds. And again, this is like in the 50s. And you got a really good support from the 18-month. And then it did it again a little while later. But notice how the ADX line is lower than it was back here. Now, a lot of people, I think, would look at this and say, hey, I've got divergence, okay? And I've told you you need to be very, very careful about looking at divergence. And you're in a very, very powerful trend. Sometimes divergences show up when it's really not meaningful at all. And a lot of times that happens when the ADX line is still above 25. If you get signs of divergence, especially when the ADX line is up in the 40s or the 50s, you need to be very, very careful about doing any kind of counter trend trading. Do not fight the trend when the ADX is in a very strong, powerful level, like 40 or above. Once it gets down to, say, 30 or 25 or something like that, and you get a divergence, you can use that. If you notice, the MACD line kept on hitting new highs with price, and it still is. Every single time price is hitting a new high, the MACD line is hitting a new high. So I'm not getting the same kind of divergence reading off of the MACD. And this is the reason why I do like to look at both at the same time. But the key thing I'm looking at is if ADX can hold above 25 and it can also hold above the 18-month, I feel like I have a very good chance of looking for a zero line reversal on the lower time frame. And again, I got 2 of them in NOW, this trend line break and this trend line break. In this case, because it was so severe to the downside, I would have probably waited for the trend line break, which is the 1. I would have waited for the pullback and make a higher low and then either take out the high or probably done it on this higher pivot low at where the arrow is pointing. But both really qualify as a zero line reversal. Let me just quickly add a few more symbols in here so you can see same pattern, strong ADX holding the 18-month, and then we get a downtrend break, a test of the low, and when you turn back up through the 40 where I have the arrow, that is the confirmation of a MACD zero line reversal. Let's just look at a few more. These are all software companies. This is more recently. Actually, this was the beginning of 2019 as well. Sideways consolidation, still had the trend line break with the zero line here. Notice this one was also holding the monthly, and it had really strong ADX. But look at how violent the decline was, and that caused a pretty serious overrun of the zero line. To me, when the blue line or the signal line crosses down below 0, you don't really have a zero line reversal anymore. I can see the red line or the MACD line crossing down below a little bit, but if both lines cross down below, I would not consider that a zero line reversal anymore. Look at something like RNG. This was a while back, again, actually around the same time frame as the Microsoft, but same pattern, strong ADX reading and a zero line reversal. And this is not just in software companies. This is MasterCard. Visa had the same pattern, strong, powerful reading here. You get the pullback to the 18-month, but if you notice, the ADX line is still way up in the 50s, 40s, and then you get a zero line reversal here with a trend line break. We can look at a few more examples. UNH. Same thing back in 2016, the beginning of 2016 here. And if I zero back here you can see the trend line break. That was sort of the kickoff move with the zero line reversal. If I want to look at something like Home Depot way back in 2014, same pattern. This was more of a horizontal trend line break, but it was a zero line reversal. So these are all the same pattern. They're variations of the same pattern. I think it's very, very important to get a feel for it. If I go back and I could do this on pretty much any one of these, just to show that this pattern does develop in all time frames. This is a daily chart of Microsoft just over, say, over the last 6 months. And if you notice, this penetrated 25, but just a small amount. But when this came into the 18 at the beginning of December, the ADX line was still above 25. So that really qualified. And if you went down to a lower time frame, you could have seen the zero line reversal pattern develop. Now, when you use a daily and an hourly, because the hourly is a 1 to 6.5 and not a 1 to 5 ratio to the daily, you're going to get a little bit more of an overrun of the zero line. It won't be an exact right at the zero line reversal, but same concept holds. And then if you notice here, you had another version of this, really strong, powerful ADX reading, and you pulled back and it still held well above the 25 level. So this is just a few more examples. I think it's important to understand that if you're going to look at stocks, you want to try and zero in on the best names, the best of the best. And this is one of the ways that I would do it. You can certainly do it by looking at one stock after the other, just browsing through and looking for these patterns. I'm going to show you in future videos the type of screening tools that you can use to really kind of speed up the process so you don't have to go through thousands. Maybe you go through 100 or maybe 50 or something like that to pick out the best ones. So hope this was helpful. Please hit the subscribe button and make sure you hit the bell so that you get notifications. And also hit like if you like this type of video so I know which type of videos to focus my efforts on. All right. Thank you very much.